I think everyone would agree that the goal of the annual budget is to make sure there's no maintenance increase or common charge increase going into the new year. Actually, probably the real goal would be no increase and maybe give some money back to all the owners. I know that's always something I hear. Well, why can't we do a refund? So in all the years I've seen, maybe that happened once. That has happened. So what are the goals? Goals are I like to break it down into maybe a couple of subtopics of that. And one goal is to make sure you understand what you're budgeting for. You're budgeting for a co-op or condo. A co-op and condo, I think a lot of people's opinion, mine, feel strongly about this, is a non-for-profit. The building's not there to make money. Obviously, if it has extra money, we'd love for the building to put it to the side for reserves, for capital projects in the future, not to necessarily jump to give it back to the owners or give it back to the board members. God forbid. But we want to make sure we look at it that way. We want to balance our budget, make sure the expenses are covered by all the revenues, and make sure that we make informed decisions in terms of putting the budget together. We also want to think about the future. So usually, like you just said, it's busy seasons coming up, budget seasons coming up. That means the managing agents and boards are going to be busy putting together 2022 budgets. But do we want to stop there? Do we want to focus in 23, 24, 25? And I'm speaking necessarily of capital items that might be coming on the horizon. I can't, if you kind of take a tunnel vision on just the upcoming year, you might miss bigger picture items that are happening that are on the horizon coming up. You don't want to budget a deficit. I know this happens. I've seen this, and boards are scared to do an increase. The big pitch I get a lot, and it's hard for me as an auditor to obviously relate, because I'm looking at it from a higher level. I'm from the outside. I'm independent. All the other buildings in the neighborhood don't having, our maintenance isn't in line, our common charges aren't in line. So therefore they'll make a decision to budget a deficit for the year. Okay, $5,000, $10,000. I'm not gonna, I won't, I'm not gonna slap you on the wrist. But I've seen buildings budget for 60, 70, $100,000 deficit, and they say they'll take it out of the reserve account. Now, is that really the appropriate, the way to go about it? You have a reserve fund that you're saving for a roof project, local law 11 facade work, an elevator modification, a roof deck, a new lobby, and now you're going to take 100,000 out of that bucket that a lot of buildings have worked probably really hard to save that money over the years, and you're just going to take it out and take it for operations. Don't do that to yourself. Don't let the information you're hearing from brokers and other people on the street make you make a decision that's going to do that. There are other ways that we can get around it, which we could talk about in a little bit. And the last thing I really like, or the last couple of things I like to talk about really is on the goal is remember that this document is going to sit with you for the next year, right? So you're going to put together a budget. Hopefully you're going to do it timely. You're going to get it approved. It'll be a sitting document that purchasers are going to look at, attorneys are going to look at, banks of future purchasers or people that want to refinance are going to look at. This is the document that's going to be the face, along with the financial statements, of your building for the next year. So if you are going to not put the right amount of effort into it, or produce or publish a document that shows a deficit, you're going to be answering those questions for the next year. And Megan, I'm sure could tell you how many times she gets those questions. I get those questions sometimes as an auditor. Can you explain why the building budgeted a deficit? Or how's it going to cover that deficit in the future? And those are questions, and puts doubts in people's minds that want to buy into the building. And you want to put out the best product for your building that's going to be memorialized for the next year or so. So when you're looking at that from the perspective of looking at it from a non-for-profit perspective, that's one goal. The other goal is look at the future capital. What do we have on the horizon? Let's not do a deficit. Let's focus on making sure it's balanced, and remember it's a working document as well. I wanted just to touch about one thing in terms of goals that's more of an accounting terminology, and I'm not going to get into it, but I'm going to throw out the terminology of cash basis versus accrual basis. I know, so just the basic translation of that is cash basis means your financial reports are Money comes in, money goes out. That's all that's reported in any given month, in any given year. So if you're not paying your bills and you're not collecting cash, those numbers aren't going to be showing up on your report. That's cash basis. Accrual basis is what should have happened. What money should I have received for maintenance or from laundry income or from my commercial units, and what expenses should I have paid? And when you and the difference there with a budget is when you want to look at a budget for the full year, you want to take all the ideas of what should have happened, both on the revenue and expense side, and not look at necessarily what had happened on the cash basis, because that could construe your viewpoint and not give you the best picture in order to prepare the budget that's coming up for the year. So those are the kind of, I guess, the 5 things we want to talk about. Again, just non-for-profit, prepare for the, view it as a non-for-profit, prepare for the future, no deficit. It's a working document for the next year, and then just understand it, whether you're preparing a budget on the cash basis or the accrual basis. So those are the goals.